Welcome to this month's Grow Your Law Firm webinar. Departmental focus is the key to profit success. My name's Matt Sleater from FWO Chartered Accountants. We're the lawyers' accountants. Thank you very much for attending today. I've chosen this topic for this month about focusing on departmental results, because in my experience from working with legal firms, usually what happens is firms focus on some global numbers and then try to apply strategies globally across the entire firm, instead of breaking down and understanding what those numbers look like within each department, which may be each area of law, and then developing specific strategies to drive improvements in those areas. So today what we're going to do is we're going to run through a few numbers. So again, I'm a chartered accountant, everything comes back to numbers, but I'm going to run through some numbers and give you a little bit of a picture around how to go about assessing the financial performance of each of your departments. We're going to then spend some time briefly discussing some of the strategies that you should be implementing in your firm to drive changes in these outcomes. For those of you who have attended our webinars in the past, you'll know that I have a book that I've written called The Revenue Revolution for Law Firms, which is available at fwoca.com.au in both ebook and in hardcover. So a lot of the stuff that we will cover off today and the concepts that we'll be discussing are all included in my book. So for a bit of a deeper and in-depth review and some handy tips to help you grow your profit and cash flow in your practice, feel free to visit fwoca.com.au, follow the links, and get your copy of the Revenue Revolution for Law Firms. Okay, so let's get into it. So this is what I see in legal firms. I often see that the gross profit that's being earned in firms is running between 50 and 60%. And what I mean by the gross profit, it's the amount of revenue that's generated, less the labour cost of directly employed people to produce that revenue, solicitors and legal support staff, which is a very, very low number. And I'll run through that in a little bit more detail around what gross profit means a little bit later. I see significant variations based on the area of law. So variations in terms of that profitability, variations in terms of cash flow and recovery, all to do with how different areas of law operate. I also see firms that have got high principal productivity but low solicitor and support team members' productivity. It's usually where principals are busy working, and they've got this group of solicitors and legal support team. Often those people aren't generating sufficient profitability for the level of labour that's being paid. I see a poor recovery of work in progress when it's billed. So for starters, it's a challenge to get time actually charged into WIP on different matters. But then once it's in there, there's even poor recovery of billing that. And goes even deeper that a lot of firms have a structure built whereby their legal support people don't bill any time at all. So we have this indiscriminate use of time recording. So today we're not going to go through the fundamentals really of how to get people to time record better or what billing processes you need to review. What we're looking at today is starting from that perspective of understanding the numbers around what's going on in your business. Understanding that if you've got different areas of law, looking at those areas of law and looking at the results that they're achieving and looking at then the systems and the activities that occur within each of those areas of law, so that you can work out specific strategies that are going to produce some different results. Another significant observation is that in most firms, they very much just focus on the solicitor level, on that fee earner level, and often ignore the impact both of profitability and on efficiency and on billings and recoverability of the legal support team. And usually when you look at the combination of the profits that are being made when you combine the legal support teams together with their respective solicitors or principals, you notice a significant variation in the gross profit that's earned. So we're going to spend a little bit of time looking at that. So we're looking at any strategic implementation in any firm. I prescribe 3 basic rules. First one is only focus on what you can control. I see so often in firms that where they're spending all their energy and effort is what they can't control. They're spending their time not looking at what are those specific things that we can do that are going to make the difference. Often there's a lot of conversation and a lot of energy spent on doing the things that they can't control. So they have no ability to implement a strategy and get a different outcome, which then leads us on to the second rule of strategic planning. If you want to get a different result, you've got to do something different. Einstein defined insanity as doing the same thing over and over again and expecting a different result. So you need to, first of all, understand what your position is to start with, where you want to get to, and then you've got to implement something different to produce that outcome. And lastly, focus on the majority. Most conversations that I have with clients when we first start working together is around the minority. They talk about those clients that complain about fees. You know, they have this, there's a concern about fees. Well, that's usually only a minority of clients. Most clients don't complain. Most clients just pay their fees. They talk about conveyancing and the impact that it has on their firm. And usually conveyancing is a small proportion of the overall revenue of most 1 to 3 principal sized firms. They'll talk about specific people within the company, within the practice, and they forget to focus on the majority of people that actually do what they're supposed to be doing. So the other strategy to get major changes in outcomes is to focus on the majority, focus on those changes that apply to the majority of people and the majority of transactions and the majority of clients, because when you focus on the majority, you get an amplified result, an amplified improvement. And then you just manage the exceptions, you manage the minority. So that's basic rules about strategic implementation. So let's get into it. So we're going to start with just looking at a simple P&L, profit and loss statement for a firm, and then what we'll do is we'll be breaking this data up into the different departments and having some, I'll be just having a bit of a discussion with you. Sorry, it's a one-way discussion just from me about how the departmental analysis and the teams-based analysis has on the impact that it has on profitability in a firm. So what we're looking at here is looking at, say, a 2-principal firm. They've got professional fees that they bill during the year, about 1.72 million, with some other cost recoveries on top of that. They employ, there's no salaried principals, they employ solicitors for $316,000 and legal support people, which is legal secretaries, paralegals, for $300,000, and have an indirect labour, being the administration people, practice manager, receptionist, those people that don't work directly on client matters. So total labour cost of $758,000, various other expenses that they have. So total expenses of just short of $1.3 million, with a net profit before equity, principal, salaries of $524,000. So this, this is a typical type of two principal firm, making about $250,000 in profits, which then goes to debt reduction, managing working capital, paying tax, all of those things before they actually make their draws. So that's basically our starting place. So the first thing you need to do when you're having a look at your departmental review is start by looking at your total picture. Pull up your numbers for the last 12 months, whether or not that's to 31st of December, so 2017 calendar year, or if you can pull up from your practice management systems up to the 28th of February, whatever it is, just have a look at those last 12 months so you've got a starting point. Then what you should do is you should split that information up into these different categories. So first of all, look at every employee in the business. Fundamentally, your input cost, your true input cost for generating your revenue is your labour cost, and more specifically your direct labour cost. The cost of all of your employed solicitors, salaried partners, legal support people. Now, I include legal support people because they are employed to make sure that those matters are completed and work is done on those files, so that the file can be closed and billed. Or from an equity principles perspective, usually I don't include any principal salaries when I'm reviewing these numbers. The reason being is that equity principals generally do a lot more than just client work. But what we need to understand is we need to understand the ratios. We need to understand how much we're actually paying, how many hours we're actually paying for people to work on those files, and then what the returns are that we receive. So every product that is sold, whether or not it's a legal solution or a pair of sunglasses, there are direct input costs. So sunglasses have got glass and plastic and screws and metal and lenses and all of these different components, hours, machine hours. What we have in a professional services firm, in a legal practice, we have hours, we pay labour, and it's basically our return on that labour that produces our profitability. So grab your information and break it down. So just look at each person for that same last 12-month period. Break it down by department. So if you've got departmental reporting already in your practice management system, where every matter or every employee is allocated to an department or both, then include that department. I also like to have a look at teams, and when with most firms there is a direct relationship between specific legal support people and specific solicitors. So what you need to be able to do is have a look at the profitability of those particular teams where those links exist. The reason being is that usually when we're focusing on the revenue that's being generated by the firm, we take that back to equity principals and solicitors and ignore the cost of legal support labour that directly relates to that revenue. It's a critical point to be aware of, and if there's one thing that you take away from today's webinar, it's understanding the real labour cost of generating your revenue, a real allocation of that legal support labour, whether they bill or not, to the revenue that's generated. So split them up into teams. So I've got 4 departments: commercial, family, estate, and conveyancing. I've then allocated each of those fee earners to different teams. So those teams predominantly work together and maybe share resources in terms of the legal support. So then we analyse, what's their full-time equivalent number and the revenue that they've generated in that last 12 months. So we've got $1.72 million there, split up over those varying fee earners. You can see in this particular practice that there is minimal, if any, revenue that's built up by the legal support team. Putting in their salary packages, including super, and then what their target charged hours expectations are. So the expectation of how many hours they're going to be charging into work in progress for doing client work every day, what their charge rates are, and then if you can gather this information, it also makes your analysis even better. Find out how many hours that each person has actually charged into WIP in those last 12 months. Usually it'll be from some sort of a charged hours or productivity report within your practice management software, but find those hours that have actually been charged. And then also if you can find the dollar value of fees that are written off. So all practice management software, sorry, it's not fees written off, but at the time of billing or closing a file, that WIP that hasn't been billed, that's the amount of the write-off. All your practice management software applications have all this information available within them. So gather that base information. So once you've done that, you've got some core data that you can then start manipulating. You can then start having a look at what does all of that mean. What's our profitability that we're making by employee type? What's our profitability per department? What's our profitability per team? And once you see that data, it starts telling you stories about what needs to be the focus. What area do we need to focus on? What do we need to be focusing on in one department or in one team versus another team? What's happening with our structure of employee type? Are there specific strategies that have got to be focused on that can improve profitability by focusing on our legal support time recording as opposed to our solicitor write-offs? But once you've got the data, then you can start making decisions. So let's start off with the revenue. So we're going to just work through this quite gradually in each different component. I'll give you some assessments around what I see from these numbers, and then we'll come back to some specific actions. So to start with, we're going to be looking at the revenue side of things. But before I do that, I just want you to understand this concept of an efficiency factor. So efficiency, the concept of efficiency is really to say, well, how much revenue are we making compared to how much revenue we're supposed to be making based on our revenue formula, okay? So efficiency factor is basically our actual revenue divided by our capacity revenue times 100. So how much revenue have we generated as a percentage of the revenue that we should be generating if everyone hits and recovers the right number of hours every day that they're there working. So it's the percentage of revenue billed versus the revenue that could be billed based on the firm's revenue formula, which is, how many full-time equivalent fee earners do we have, which are your equity principals, your salaried principals, your legal support people, and your solicitors, multiplied by their available hours. So how many hours are they here at work? So generally I work on a 44 weeks of a year because you've got 4 weeks annual leave, 2 weeks sick leave, and 2 weeks statutory holidays, times with those hours that they're there working, how much of that's being charged into WIP, or they're supposed to charge into WIP, which is their productivity, 4.5, 5, 5.5, 6 hours a day, times their charge rate, times how much of that time value is actually billed. So you might have $1,000 added into WIP, but only $900 of it's billed. So there's a recovery rate of 90%, or conversely a write-off of 10%. So basically we've got to do an assessment. So it's telling us, well, where have we got leakage? What's the story that's happening in our business around how much revenue we're generating versus how much we should be generating? And if you find that your efficiency factor is fitting into these sort of percentage bands, then it gives you a bit more of a guidance as to what actions you need to be taking. So if basically your actual revenue is equating is equal to your capacity revenue, then you're at a high level of efficiency. Chances are you've got no capacity to take on new work, but you should in any event test your revenue formula. So making sure you've got the right amount of people, that your charge rates are right, that there isn't too much happening by way of write-off. People are hitting their productivity, but generally, if you're at 100%, which I very rarely see, if you're at those levels, then you're at capacity. If you're at that 90 to 99%, chances are you've got minimal spare capacity. Chances are everyone's pumping out all the work they can. There's not much room for any extra work, but still test your revenue formula. From that 75 to 89% usually means that there's some room for improvement. So there's generally going to be some spare capacity in the practice. There's usually a good opportunity to grow the revenue formula so that people, can be charging more time into WIP, or there's a bunch of write-offs that are happening, or that relationship between, or we're carrying too much labour costs, which means it's spreading the work out too thinly, or a combination of all those. What I often see in firms, though, is an efficiency factor of less than 75%. Which basically means they're not getting the return, anywhere near the return they should be on the labour that they're employing to generate that revenue. So that there's significant spare capacity. It's a very loose revenue formula. Meaning that there's minimal controls and accountability around KPI and revenue performance and outcomes that are being achieved across each individual, each department, each team. And often there is an historical over-resourcing of the firm, so that there's usually some sort of direct labour cost that needs to be cut. So the only way to really grow your profitability of your firm is to do one of three things, and that's either to increase your revenue, reduce your costs, or do a combination of both. And again, what you need to be focusing on are those things that you can control. Often it's very difficult to control revenue. If you've got a very loose revenue formula, if the controls and the accountability and the systems aren't in place to provide you with a predictable revenue outcome, it's very difficult to control that. So often what you need to do is start with the fundamental basics of looking at what amount of revenue you are generating from that labour cost, then looking at the systems, and sometimes the starting place is a rationalisation of your labour cost, but only doing that after you've gone and implemented some strategies around getting those controls in place. So let's take a look at these numbers. So all I've done here is I've gone and split those that revenue up based on, I'll just go back here, based on those core numbers around each employee. I've gone and split these revenue numbers up and determined the capacity revenue that could be generated just by the employee type or fee earner type, by area of law and by team. Okay, so in this instance, we look at it, we've got 9.4 fee earners in the business. That $1.72 million is then spread across equity, principal, solicitors, and legal support. And then we look at the efficiency of each. So what is the capacity based on our revenue formula, based on our charged hours expectations, based on our charge rates, based on our number of full-time equivalents we've got. Our expectation is that that's the capacity revenue they should be generating. And in this firm example, we've got our equity principals operating at about 80%, we've got solicitors at 70%, and we've got our legal support at about 18%, which is normal because they don't have a policy of charging clients. So if we break that down and have a look at that, we say, well, okay, what we need to do is we need to work on our recovery rates for our solicitors and our legal support, because solicitors are only running at 70% and legal support are running at 18%. So you got to think about what can we do in those areas to focus on improvement. What are the systems and processes that are causing us to not achieve those outcomes? And usually what I find in firms is that it's not to do with lack of work. It's to do with the looseness and the discretion that exists within the systems that actually drive the revenue. Time recording, billing frequency, billing amount, pricing up, estimates up front, non-engagement of clients, and so on. If we move on to areas of law, so we see in this particular practice, our efficiency factor from conveyancing is running at about 56%. Commercial is at 52%, and estates are at 62%, and families at 76%. So looking at that, and if we apply a principle of not just being too global about our assessment, we're able to then drill down into each of these areas of law and say, well, okay, what's happening in there? We're only running at a 52% commercial practice in terms of the revenue that we should be generating out of it. So we're only generating about half the revenue we should be. What are the key drivers and processes and things that are happening within that area of law that we need to be focusing on? Are we carrying too many people? Are we writing off too much of our time? Are we not recording all of our revenue? Do we need more files? But basically, if you want to get that different result, you've got to either increase that revenue, so get it from 800 up to as close to 1.5 million as you can, or you can say we can make more money by not carrying as much labour and still produce $800,000 by spreading that across people, or it's a combination of both. Let's put some systems and processes in place to get some more structure around our billing, generate some more revenue, but also spread that across a smaller number of people. So again, here if we looked at this particular practice, the area I'd be focusing on is very much in the commercial and estate parts of the business to start with, because they've got the lowest efficiency factor, which translates to they've got the highest dollar value of hours that are being paid either to equity principals or employees for the amount of revenue that's being generated. And then finally, if we look at departments or teams, sorry, I shouldn't have department there, this is really looking at teams, because what we might find is we might have everyone that's in the commercial team might also include, say, conveyancing. And so we then look at what's the labour cost that's attached to conveyancing, or what's the labour cost that's attached to the team 2, which might be a mixture of some people that do a percentage of commercial work and some estate work. And they might share legal support resources or work together on files and so on. So when you have a look at that, we break that down again and say, okay, what we've got here, and it just so happens that team 1 here is really just commercial, but when we break that down, we can see that same 1.526 million. So we can say, look, we've got an issue in that commercial team. It's telling us that our team is only producing half of the revenue that it should. Team 2 seems to be working pretty well, and Team 3 not so well. But if we focus on strategies, there are probably strategies we can focus on all teams, but you're going to get the biggest hits from making your improvement strategies focus on Team 1 and Team 2. So that's basically from a revenue perspective. By looking at your profit, your revenue generation compared to your capacity on a fee earner, an area of law, and a team basis, and sometimes your team basis is exactly the same as your area of law, it will give you insights into what you should be focusing on and what you shouldn't be focusing on, and what you need to dig deeper into. So the next thing we're going to talk about is gross profit. So we've got that first relationship of revenue, how much revenue we're generating, and how much we should be generating in each of our departments. Second thing is we're going to look at that relationship between our revenue and our labour costs. So our gross profit is our revenue minus our direct labour costs, so our employed solicitors, our salaried partners, and our legal support team. So our direct labour cost is compiled of those three different types of equity of employees. So three different types of labour. So our gross profit is the difference between them. It basically measures the relationship we have between the revenue earned for every hour that we've paid. So for your direct labour cost, it's your input cost. So you've got to look at what is the total cost of generating that revenue, ignoring overheads, ignoring your indirect labour, your administration labour cost, ignoring your rent and your IT and your insurance. That's all an overhead. It's the only way we're going to grow revenue and grow our profitability. We can cut our overheads a bit, but the main way we're going to do it is by getting more profitability, more revenue out of our labour costs that we're paying for that's directly related. So we're just expanding that out a little bit further. Exactly the same analysis, but in this case we're also adding the gross profit data to the right hand side of this analysis. So again, we've got then the labour cost that is being paid to generate that revenue. We're then looking at the capacity gross profit, which is basically our capacity revenue minus our labour. We're looking at our actual gross profit that we're generating, and then we're looking at what that is as a percentage. So remember I said earlier, what I see in firms is often this gross profit percentage being somewhere between 50 to 60%, which is ignoring principal salaries, equity principal salaries. And usually what I see is that there's a good correlation between higher production output by principals and lower production output by solicitors and legal support staff that actually drives that lower gross profit. So we can see here that our average gross profit is only 64%, but where is that coming from? So when we look at our solicitors and we look at our legal support team, we see that we're only generating 64% gross profit out of our solicitors. So the cost of our labour is $316,000, and it's only producing $870,000 worth of revenue and producing a gross profit of $554,000. So our $554,000 of revenue here, of gross profit here, is equal to 64% of the revenue, which is way too low. But what amplifies that is that this labour cost of $300,000 is only for legal support is only generating $140,000. So what can we do? That's got $125,000 worth of conveyancing in it. So what can we do? So we've got to have a look at that relationship. Some things might be that our charge rates might be too low because they're not incorporating the amount of the labour cost that's required to produce that file and do that work by the solicitors. It might be that our cost agreements actually say that our paralegals and legal support staff will be able to charge time, and here's their rates, and here's the sorts of things they'll be able to charge on. But the fact is that there's no accountability around them actually entering their time. So with all of these things, it can be that it's times just being revenue's just being left on the table because our revenue formula hasn't got the accountabilities built into it. So this says to us again, okay, we've got to think about how our solicitors and our legal support team are working to improve our profitability. But let's go and dig a bit deeper. Let's go into our area of law now and say, okay, what are the GPs, the gross profit that we're making in our different areas of law? Well, conveyancing's only making 44%. So what can we do there? Maybe we've got to really think about our pricing. We've got to think about things like how we structure the the upfront pricing, because most pricing from a conveyancing point of view is fixed price. How do we structure our pricing model so that we get paid more? And look, let me tell you that pricing is usually a bigger thing to you as a firm than it is to your clients. Most clients will make their decision they're going to buy from you before they come and see you. They're either come in via a referral network or from an existing relationship that they have with you, either as a client or otherwise. And they already think you're expensive. So don't disappoint them. Make sure that you bill them appropriately. So from a conveyancing point of view, and this also applies to simple wills, set your base fee. Set your base fee that this is for a standard conveyance. Then this is what's included. But any variations to that, you charge another fixed amount. So, there's a request for an extension of settlement due to finance. So, that's an extra $150. There's a negative report for building and pest, which means we've got to negotiate some of the terms or get some variation to it. That's another $175. There are all these things that clients will pay for. You just need to advise them appropriately at the front end and engage them properly. So pricing is often the fix for conveyancing, where firms continue to have that. We look at the commercial space here, and with the commercial side of things, in this firm we're running at a GP of 61%. So again, it's looking at what the strategies are that need to occur in there. Are we not following the processes that we've prescribed in our costs agreement? Should we be having our legal support people charging more? Is our pricing too low? Are we writing off more time than what we should be? So digging into each of those processes to determine what the action plan is for the commercial side of it is going to be different to what you've got to then focus on for conveyancing and estates. And then if we look at the estates, it's actually only running at a GP of 50%. So what have we got to do there? Again, it might be about pricing. It might be around not charging time. But you've got to get into this data and then work out what is happening, not just apply a global rule. And from a family point of view, I wouldn't be spending any time on it because you're running at a pretty reasonable GP anyway. So that basically comes down to that in family there's a single equity principal and a support person, and so they've got to get a much bigger GP. But there's still room for growth there because they're only running at $455,000 worth of revenue out of nearly 600. So it gives you a bit more of a focus, and it gives you a point and a place to start with. If you then break that down into your teams, you get focus on those different variations, and I'm not going to go through that in any great detail. But in this scenario, we know that team one, the commercial team, is actually not performing that well, and so we need to have a look at what that labour cost is and how we can get more revenue out of it. So we focus on that. So to start with, that's what's giving us a good picture by diving into those departments and then working out what are those core activities, those one or two things that you've got to change and fix in those departments to get improvements. And then this comes down to your KPIs. So your main KPIs, key performance indicators, that you've got to be focusing on to improve your profitability, apart from just generating more revenue per matter, the right type of matter. But you need to focus on productivity. Productivity is basically your charged hours divided by your available hours. So how many hours are people actually charging into WIP when they're there at work? The higher that number, the higher value goes into WIP, the higher chance of increasing revenue. Then looking at your write-off, which is just your WIP that's written off against your WIP charged on a matter. So the more WIP that you recover, the higher your billing is going to be. So first of all, we focus on productivity, getting it into WIP. Secondly, we focus on the write-off, making sure we bill it when it's in there. And what that then results in is an improvement in your average rate. So the more time that's added into WIP, of those charged hours that's recovered, you get a higher average rate for the hours that are charged. But the main driver of profitability, which brings it back to your gross profit in a legal firm, is your average rate for paid hours. So how much revenue have we billed divided by all of our paid hours? So for all of those our legal support, our solicitors, our salaried partners, our equity partners, what are the number of hours that they are effectively paid for being there? You know, for 52 weeks of the year, how much revenue have we generated? So they're the core numbers that we've really got to be focusing on. So you'll be able to then take that data that you've got, looking at, okay, we've identified that we've got, our commercial our part of the firm needs to really focus on some strategies. Our GP is really low, but how do we do that? What do we do to focus on our strategies to improve productivity, improve our write-offs, and increase our average rates? So we've got to understand that data as well. So all this data is just fed off the employee summary that I showed you earlier on. So if we look at our equity principles, the actual productivity there is 4.49%. You know, the budget for equity principles was at about 55 or 60%. They were working on 4.5 hours out of 7.8. We've got then the actual dollar value of write-offs that have occurred. We've also got the average rate for charged hours and the average rate for paid hours. Again, split up by fee earner type, by area of law and department. So what we've then got to be looking at is what are the activities that drive these outcomes. So first of all, if we just looked at the fee earner type, what we've got to look at doing is getting an improvement in our productivity and a reduction in our write-offs. So when we look at our productivity, we've got to go and look at what are equity principles. It's not the issue. It's the issue around our solicitors only running they're probably about 3.9 hours average a day, and legal support only at 14%. So what are our policies around time being charged by legal support? What are our strategies and actions to implement that will result in more time being charged by legal support and by solicitors? You know, what is the policy around employee engagement? What is the policy around what goes into WIP and what doesn't go into WIP that we're working away on files? What structure can we put into place so that everyone's aware of their KPIs and where they're up to and how they're running on a weekly basis? What are our strategies around engagement, around pricing? And then as matters change, are our write-offs occurring because we're not re-engaging a client when a matter goes off scope or gets bigger than what we were planning on whilst we're working through? Have we got some better pricing model that we need to be implementing? Should we just be increasing our charge rates by 10% and then billing it? Should we be changing to a policy of, if it's in WIP, then we bill it, and then we only manage the exceptions around about client queries if they have a query in relation to the fee, remembering that the majority of clients just pay their fees. If you've engaged them well and you keep them up to date on changes to their estimates during the progress, generally they will pay you. Also, if you regularly bill clients, they will pay you smaller amounts faster than big amounts at the end, depending on whether or not it can only be if it's not a deferred settlement type matter, PI, or maybe a family law matter. So again, it's just breaking up all of those specific KPIs, looking at them by different fee earner type. It's also looking at them by area of law, focusing on, we've got the biggest write-offs happening in commercial and estate. So what have we got to focus on there? If we were to get our write-offs up to reduce from $94,000 down to $24,000, there's an extra $70,000 worth of revenue that's billed. We can see in the commercial and the estate teams that the actual productivity for all of the hours is extremely low. So that's saying that we're not generating anywhere near the production output that we should be. And you'll see that when that goes across to your average rate for paid hours, that in every instance here, our average rate for paid hours is only $91. All we are making in this firm is $91 of revenue for every hour that we pay, including equity principals. And when I go into firms and do this analysis for them, those numbers are a usual number that I see. I don't, it's often below that $100 mark. And it's this disconnect that firms have got, that they think, and particularly with the solicitors in firms, where they think they're making $300 or $350 or $400 or $500 an hour for firms, when in fact they're not. What they're making is something significantly less, because that's only based on the productivity. That's only based on the hours that they're charging into it. It's totally discounting the fact of the whole labour cost that's got to be paid and how many hours just to produce that. So, in this instance here, if an increase of from $91 to $100 per hour would have a significant impact on the profitability of the firm. And it's then a matter of just drilling down into what are those core actions and those core strategies that we need to look at that might be different by fee earner type, might be different by area of law, and might be different by each team, depending on the mix of area of laws that each team works on. So you've got to drill down, get the data, understand the data, put it in a format that says, okay, it's telling me a story, then dive deeper into the why. And once you've done that, you can then start developing and implementing strategies. So what I'm going to give you next is a list of some of those things that firms are doing that are making significant differences in their output, in their ratio between the revenue that's being generated and the labour costs. So these are just some tried and tested simple strategies that you can go away and implement from here. There's a whole lot of other stuff as well. A bunch of it's included in my book, but there's a whole lot of other stuff that you can do as well. And I've just tried to narrow this down to those core activities that have got the biggest impact on the drivers of profitability. So first thing is, let's just gather the data. Get a departmental financial analysis done so that you can see what's actually happening. Only make your decisions based on empirical data. Only make your decisions based on what that data is telling you over a period of time, where you can see trends, not just based on gut feel, because sometimes you're wrong. So understand your revenue and your GP by fee earner, area of law and team. Understand your productivity write-off and average rate for paid hours, in particular paid hours. That is your core number one number, your number one KPI that you need to measure. So then start at the very beginning. Review your client engagement process. Firms that don't have profitability issues and recovery of their paid hours have very strong, tight client engagement processes. Every client has a cost agreement or some sort of engagement agreement. They have a simple letter that covers off that cost agreement so that the client knows exactly what you're doing for them and how much it's likely to be and how they're going to pay you and what the requirements are around what goes into trust and how they've got to pay you, billing cycles, all of those things. Really simple. And then clients are continuously engaged. So they say that we say in our cost agreement we're going to bill on a monthly basis. So billing happens on a monthly basis. And when the matter gets to say 80 or 85% of the total amount of the estimate, there's a system in place that says, do we need to be contacting the client now? We're at that point. No, we're going to finish within or around the estimate within appropriate tolerances, or no, we're only halfway through, but we're at 87%. Okay, I need to review this, need to have another conversation with the client. Those firms that do that engagement process well from start right through to finish, follow it in accordance with their cost agreement, have fewer issues in terms of achieving their revenue. They have fewer inquiries from clients about fees. They have lower debtor days. They have lower WIP days. They have better cash flow. So start with your engagement process. The next thing is to make sure that you've got clarity on the requirements around KPIs and expectations for every individual in the business, every area of law and every team. So that people know these are the number of hours that are expected of you. I said before about productivity and getting time added into WIP, and the more time added into WIP. And I also said that the firms that have got more discretion that rests with the individual around whether or not they can or can't put time into WIP, those are the firms that it's harder for them to get a predictable revenue outcome. So the key to this is not creating lists of things that do go into WIP around productivity. It's writing a list of things that don't go into WIP, because they're it's a smaller list. So it might be, we don't put time into WIP for raising a fee. We don't put time into WIP for doing a file note. Whatever the policy is in your firm, these are the only things that don't go into WIP, which means that if everyone's clear on that, everything else goes into WIP. And then what you do is you have a policy that says if it's in WIP, bill it. Because if you've got a strong engagement process that is priced appropriately at the front end, you've engaged the client when things go off track a bit or are out of scope, the client's going to pay. The client's going to not have a problem with the billing. Every KPI will sort itself out. So have those conversations, and budget setting. Set your budgets by department if your teams are working in departments or teams. But make sure individually people are aware of what's required of them. This, apart from that structural stuff I just referred to, this is by far the one thing that has had the biggest impact on profitability in firms. And that's by making sure that every area of law or team has a weekly workflow meeting. And it's not about let's discuss things on files. It's not about, oh, let's discuss that interesting piece of legislation that's been released last week, or here's this case that has been handed down. Let's just have a discussion about that. All this is about is what are we doing this week? What are the matters that we're focusing on? What are the matters that we need to re-engage clients? What are the billings we're going to be doing this week? So we're getting people to focus on, just in their teams, what work they're going to be doing. Because the key to improvement in profitability and cash flow is file velocity. The key is getting those matters finished faster. The faster and more efficient you are, the better the client service, the happier the clients, usually the better outcome. I'm assuming it maintains a high quality of work. So you've got to build a rhythm in the business that's focused on file completion. And usually this is totally ignored. Everyone's just left up to their own devices around what files they're going to work on. That doesn't work in a production management system. You've got to make sure people are focused on the things that they need to be so that the business can produce the targeted revenue and profitability and cash flow that it needs to survive and grow and prosper. And the key to running these weekly workflow meetings isn't about telling people what they've got to be doing. It's about people coming prepared. This is what I'm doing this week. I know what my budget is. These are the things I'm doing this month. This is the amount. This is who I'm going to be billing and what I'm going to be doing. This is what I'm estimating. This is what I'm going to be focusing on. And once you build that momentum where it's people saying, yeah, this is what I'm doing, things just tend to start happening because the majority of people will do what they need to be doing. They just don't have the structure that holds them accountable and allows them the responsibility to achieve those outcomes. So we say to people, here, achieve this outcome, here's your budget, but there's no accountability or structure that supports that. At the end of the day, how you structure things in your business drives the behaviours of people, which then produces the outcome. So the more structure you can get around these core areas, the more control you have without micromanaging around behaviours, the more predictable you'll have an outcome. And lastly, Focus on billing as an administration function. Solicitors should not be responsible for asking for a fee to be generated. Solicitors should not be responsible, going a bit further, for making a decision whether something's going to be billed or not. So if we've got a structure in the business where all clients are engaged appropriately, all clients are, everything that goes into WIP is going to be billed, all clients are engaged throughout the matter when things are off scope and they're billed regularly, then basically, and it's billed in accordance with their costs agreement, then basically billing should just be an administration function. It should just be something that automatically happens. It's like when you get your car serviced. The fee is, the bill that you pay is just raised at the end of the day by the finance team. You give them your credit card. It's not the mechanic that goes in there and says, well, oh, look, I did 3 hours on this particular job, but I'm only going to bill them 2.5. No, the work's been done. If you put it into WIP, it's billable. Make sure we've got the systems in place to follow the engagement on the way through. That makes a massive, massive difference. So just to recap on those key things. First of all, go for a departmental analysis so that you've got the data to see where the biggest gains can be made, which generally is where you've got the biggest issues. Then focus on the majority, not the minority, to produce those outcomes. So, squeaky wheel gets the most oil. Focus on the things that are working and how we can improve them. So if you improve a minority by 20%, but you improve the majority by 3%, your revenue is going to be significantly increased. Focus on client engagement and re-engagement. Make sure your team is aware of your KPIs and the expectations and what they need to be doing. Make sure that you focus on on having weekly workflow meetings so that the team is focused on what work they're going to be doing every week, and get billing set up as an administration function. So hopefully that's given you a bit of an overview around how to go and analyse the numbers in your firm, how to go about identifying what the strategies and actions are. Get the empirical data first, then dig deeper, then look at what's happening, change up one thing in the business, monitor it, and get it embedded. So for today, I'm offering for all of those of you who are attended our session today, the first 5 to email me at matt@fwoca.com.au will get a free 45-minute online departmental practice analysis. So what I'll do is I'll email you a very simple Excel spreadsheet, which basically you'll just go and put some data in from your practice management system, and then email it back to me, and I'll then produce all those various numbers and reports that you've seen in today's webinar for you, so that we can have a meaningful conversation about what's happening in your business and what you'll be able to do to improve that profitability. So that's one thing. If you're interested in that, first 5 to email me, we'll get those scheduled in and we'll go from there. Secondly, it's also time for you to change accountants. We're leading into the end of the financial year, we're getting all of our clients ready over the next 3 months for their 30th of June. So basically, it's a good idea for you to consider those things. And if you're thinking about changing accountants, then consider FWA Chartered Accountants. We're legal firm specialists, which means we understand your firm. These are the normal conversations that we always have with our clients. We have products that are designed specifically for legal firms in terms of helping you grow your profitability and cash flow. We work on a fixed monthly fee basis, so you get your fees fixed every year, and they are paid over a 12-month cycle, so you don't get lumped with big fees. You have included in all of our monthly fees free unlimited phone calls, emails and meetings as you're required. You will never get an additional fee when you instigate a phone call, an email or a meeting. Sometimes, say, if there's another project we've got to do, then we'll engage you around a fixed fee for that, but it doesn't happen that often. And we're making a one-time offer to 30th of April just for the participants in our webinar today, so that if you were to contact us and talk to us about changing accountants, doesn't matter where you are. I've got clients from Cairns right down to Melbourne, regional New South Wales, regional Victoria. We're based in Brisbane, southeast Queensland, and right throughout Queensland. So for all of our clients, we undertake tax planning for them usually over the months of April and May, so that they are organised for their 30th of June. And usually our tax planning, which is included in our fixed monthly fees, is an annual fee of about $1,800. So we're offering that to any new clients who have participated in our webinars. There are some conditions apply, which means that you'll need to accept changing accountants to us before we do that. But if you're interested in that, what I'd like you to do is just to first of all, go and email us if you'd like to book in a meeting. Alternatively, if you'd like to discuss changing accountants, just accept and vote on that box. I'd like to discuss changing accountants. Also, if you'd like to buy a copy of my book, The Revenue Revolution for Law Firms, please just tick on that, and we'll be in touch and send you through a link to where you can go and purchase that. So thank you very much for all of your time today. We'll be running another Grow Your Law Firm webinar in the next over the next couple of months. We're also in the process of developing some pretty cool products to help you get more depth into your reporting that you get from your practice management software that we've been developing, and should come online over the next number of months. So watch out for that. And if there's ever anything that you'd like to discuss, please feel free to just give me a call on either 0738 333 999 or email me at matt@fwoca.com.au. Thank you very much, and we'll talk soon.